Hello everyone, welcome to Just Invest Today, and today we have a great video, man. We're talking about the Daily Journal Meeting 2022, man. It just happened, man. Charlie spoke at this event. This is his annual meeting, and he broke down Baba. He broke down the critics, the people who are kind of dissing him on his Alibaba purchase. So in this video, we are going to really get into it and what he said about Alibaba. Remember that Charlie has like 27% of the Daily Journal's portfolio in Alibaba. This is a huge portion of the portfolio, and people are kind of scared. Remember, a lot of people do not like to invest in China. So we're going to break down all the questions in this video about Alibaba. The first question. In January, Jeff was quoted that China is uninvestable. In my opinion, at this point, I don't trust the data. Relationships between China and the United States. Investments could be taken or confiscated. There is a risk of that, but you feel differently. Please explain why you are right. This was Charlie's answer to the question. Only the future knows who will be right, but China is a big modern nation with a huge population and a huge modernity that has come in the past 30 years. We invested money in China because we can get more value in terms of the strength of the enterprise for the price of the security than we can get in the United States. But if other people are nervous, they don't have to join us. Different folks have different opinions. Charlie feels that China is investable, but Russia is just a no-go. He can't invest in that. So he feels kind of like the opposite point of view as other people. But Charlie reaches a different conclusion about China. So this goes to show you that he thinks that like the Facebooks of the world, the Amazons, the Apples, the Microsofts, those companies are actually way more expensive than the Alibabas, than the JD.coms, than the Tencent. So he's like, I'm getting more value, so why wouldn't I invest in China if I see more value there? So that's basically his answer to that first question. Second question. What makes you so sure that your Alibaba investment won't lead to large losses in the Daily Journal's capital, which will impact the ability to reinvest into Daily Journal's software business? This was his answer. Can you please like this video, subscribe to my channel? I'm always providing you guys with so much new content, man. So subscribe. Of course, if you invest in marketable securities, you have a risk of losing it than making it. If you hold a depreciating currency that's losing purchasing power on balance, we prefer the risk we have to those we are avoiding, and we don't mind a tiny bit of margin debt. So basically he's saying that he actually prefers the risk of actually holding Alibaba than just holding cash that's depreciating because of inflation's at like 7-8%, even probably higher, and he's okay of taking debt to make those purchases. So that's what he's basically saying about Alibaba. The third question, do we own the local shares of Alibaba? Does that give us legal ownership of the business? Or do we have a variable interest, and is that the same outcome? The answer, when you buy Alibaba, you do get a derivative, but assuming there is a reasonable honor between the civilized nations, that risk doesn't seem big to me. So he's basically saying that if the countries China and US get along, there'll be no risk of basically just like the Chinese government or the US government kind of banning the VIE structure, the VIE risk of holding these companies, because they're not legal entities. You don't really own shares of the company. So he says as long as these two countries get together and actually have a good relationship, he doesn't see this as a big risk. China can be banned from doing business in the West because of 1, the security threat issues, 2, tensions with Taiwan, 3, inability to meet accounting standards, 4, human rights issues. With all of this risk, why invest in Chinese companies? We did it for a simple reason. We get more strength per dollar invested in China than companies we invest in are stronger relative to their competition and price lower. That's why we're in China. So it's basically saying he's getting more money for his dollar investing in China compared to buying any company in the USA. So that's what Charlie sees. And basically the last question is about the political risk. And he's just basically saying he wants China and US to get along because that's just going to benefit both nations in trade and just agreements, and they have more to gain than to lose. And to think about it, they both have nuclear arsenals. So they really can't get into conflict. They really can't risk that. So he says they have to basically get along. So that's it for basically him talking about Alibaba. And there was another question kind of refraining to how come Warren Buffett didn't invest in Alibaba. Warren Buffett is not as comfortable as Charlie is in investing in Alibaba or investing in China. That's one of Warren Buffett's quirks. He thinks that he's probably Warren Buffett's a little bit more risk averse when it comes to China. Like, he doesn't want to risk that, and Charlie is more okay in investing in Alibaba in China. So that's why you don't see Warren Buffett investing in China. He kind of probably sees it more risky than pretty much Charlie does. So that's it for the video, guys. Tell me what you think about this interview at the Daily Journal, man. This was amazing. Watch the whole thing. Guys, like this video, subscribe to my channel, and get back to you in the next video. Peace!